Welcome to the fourth module of this course or lecture, where I highlight the 5 best times to trade in every day. Bear in mind, when I say the 5 best times to trade, this goes for both US30 and Nasdaq. These are the exact same times for both indices. So in total, basically, you have 10 best times. You have 10 times that you will trade, not 10 best times. You will have 10 times to trade in total. But if both indices give setups, you just choose the best one. You do not trade both, please. You will get yourself into a rut if you have a losing trade that odd day, because you will double your losses if you trade US30 and Nasdaq. That's just the way that I trade as well. So in the next slide, I'm going to highlight for you the 5 best times to trade in every day. These times are based on CET, or Central European Time. The first one is 2 a.m. in the morning. The second one is 7 a.m. in the morning. The third one is 9 a.m. in the morning. And the biggest one, which is 3:30 in the afternoon, which is also the New York Stock Exchange Open, where fundamental news come into play, but we don't really pay attention to that. And then the fifth one is at 8 o'clock at night. A big thing, not tabela. A big thing is you have to enter the market 5 minutes before peak time and look for opportunities. When I say enter, I do not mean you put in trades, but 5 minutes before the peak time, you start looking for setups and you start following the step-by-step procedure that you'll understand towards the end of this course. So I think I've highlighted everything that you need to know, and I'll catch you out in the next lecture. Welcome to the video. In this video, I'll highlight the top 5 or best 5 times to trade in the market. I'll be marking these moments, these times with a vertical tool. So the first time is 2 o'clock. I'll explain after I've drawn up the vertical lines why the time is not really the same as what I've said in the course. The second time is at 7. Second time is at 7, right there. Next time is 9 o'clock. Right there. And then let's just go back. And then another time is 8 o'clock. Right there. And 3:30. Right there. So I'll just zoom out a little bit. These times are the most crucial times to trade. These are the times that have the most volume. These are the periods that have the most volume in the market. In most cases, in almost every case, at these times, that's where there's a reversal in the market. Just like as you can see here at 3:30, here at 8 o'clock, market moved down, shot up. At 2 o'clock, market moved down, shot up. At 7 o'clock, market moved up, shot down. And then here at 9 o'clock, market moved up and it shot down. So at these times, that's when it's the most easiest to trade, rather than trading at any other time. This is also indicative of the volume that you see. As you can see, where I mark all of the volume points that are high, or where the market moves the most, these are points where there's the most volume in the market. Here there's a dip in volume, but it means that there's still volatility. Here there's a rise in volume. Here a slight raise in volume, and a rise in volume here as well. So the reason why this is 1 hour behind is because my broker is just 1 hour ahead. The server for this broker is 1 hour ahead. The time now here in the the time right now is actually 10 o'clock, but as you can see with the crosshair at the bottom, it says it's 11 o'clock. So that just shows you that the server is 1 hour ahead. So these are the times that you trade at. Now, another thing that you need to be aware of is the time that you enter into the market and start analyzing. Under no circumstances you come in 30 minutes before. Make sure that you come in at least 5 minutes before, and then that's when the setup would happen. You came in here, you would have caught this trade going down. You come in here, you would have caught this trade going up. You come in here, you catch this trade going up. You come in here, you catch this trade going down. You come in here, you catch the trade going down. So these are the times that you trade at, and as you can see, you can have 5 trading opportunities in every single day. And if you can trade a minimum of 3 trades with the right risk management, you'll be able to balloon your accounts within the course of a week. You can multiply it by a few times. If you risk maybe, let's just say 10% of your account or less. It's all about the long game. It's all about taking your time and not trying to double the accounts in one session. It's just a matter of when, where you reach the targets that you have in terms of trading. So yes, this is what I wanted to show you. These are the best times, and I hope you stick to them. Moving on to the next section, and eventually we're going to combine all of this together into a powerful strategy, and can't wait to see you then. So we'll talk. Welcome to the 5th module of this course or lecture, where I combine all the concepts into a powerful and efficient strategy. At this point, you understand the first concept, which is the RSI, and you understand how to set it up on the chart. And at this point, you also understand the moving average, which is the second concept in this course, and how to apply it to the charts and how it works. And then now, another thing, which was in the previous lecture, you understand the 5 best times to trade. So now it's time to combine every single thing that we have learned up until this point and turn it into a powerful and efficient strategy. So in the next slide, I will go into that. So let's move on to the next slide. Combining everything that we know. So before we get into this, I want to say one thing. We are using 2 time frames. We are using the 1 minute chart, and we are using the 5 minute chart. M1 and M5 only. For buy setups, you go to the M5 chart and look for the price to visibly close under the oversold level on the RSI, which is the 20 level. It has to close below. After that, we move to the M1 chart and wait for the 5 SMA to cross and close above the 15 SMA, and then you enter for a buy. Sell setups. You go to the 5 minute chart, just like in the buy setup. You go to the 5 minute chart and look for price to visibly close above the overbought level on the RSI, which is above the 80 level. Then you move to the M1 chart and wait for the 5 SMA to cross and close below the 15 SMA, and then that's when you enter for a sell trade. In the next slide, I need to show you something that's very important once you've taken these trades. So let's move on to the next slide. Here I actually outlined the exit strategy. In a buy trade, after you enter the trade, hold for 3 more candles and close. These are 3 green candles. This should take a total of 3 minutes before the trade is closed. In a sell trade, hold for 3 more red candles and close. This should take a total of 3 minutes before the trade is closed. And in white, I had to put it in white so it stands out. In cases where the market moves rapidly into profits, a trailing stop is key, because you can ride the wave as profits continue to grow in your favor. Only do this once you become confident and experienced in the strategy. I think now it's time for me to actually explain to you in the next video how to actually apply everything, and I'll give quite a few examples, so be prepared because it just might be a lengthy video. So I'll catch you out in the next video. So now we're combining everything into a powerful strategy. So these are the steps that you need to follow when it comes to using the strategy. You come into a market where there's a peak time, like for instance here, Nasdaq 100 at 9 o'clock in the morning. But I'm marking it here. Let me just zoom in. I'm marking it as this candle because this is the time when you'd actually come into the market 5 minutes before, as you can see right here. So as soon as you come into the market, what you're looking for is oversold or overbought conditions on the M5 chart with the RSI. The only thing you pay attention to on the 5-minute chart is the RSI. You are just looking for overbought and oversold. Once you see an oversold or overbought area, in this case it's oversold, then you switch to the 1-minute chart and then look for this. Let me just switch to the 1-minute chart. Move to the 1-minute chart, and on the 1-minute chart, after you've seen what you've seen on the RSI on the 5-minute chart, on the 1-minute chart, all you're looking for is a crossover of the 5 moving average with this 15 moving average. Here we see the crossover right here. Then in this candle, after this shows a crossover here, a clear crossover, you enter your trade here and you hold for 3 candlesticks. As I've said in the previous video, you would have caught 201 pips. This would have been a winning trade. This is the clearest setup you can ever get. So I'll just say this one more time. You come into the market 5 minutes before. You look for overbought and oversold. Here it's oversold, as you can see on the RSI. Once you have that, you start looking for confirmation on the 1-minute chart from the moving averages. Here the moving averages cross, and then as soon as they cross, you enter in for a buy, because the 5 moving average, which is orange, crossed the blue moving average, which is the 15. You enter in for a trade and you hold for 3 candles and you're good after that. Now, since we're trading on Nasdaq, let's move to the other setup, the opposite setup. The opposite setup, which is a sell, would be here, and this would have occurred at 3:30 during the open of the NYSE. So what do we see here? Here we come into the market 5 minutes before. Yeah, this is 5 minutes before. And all we're doing now is waiting for the markets to be overbought. Once it's overbought, which is on this candle here, on the next candle, you have to wait until this candle finishes forming and close above the overbought. That's very important. It can't be something like this candle here, this situation here. No, this does not meet the criteria of the strategy. So as you can see on this candle here, it closed above overbought. Since we see that it's overbought on the 5-minute chart, that's when we start looking for opportunities on the 1-minute chart. So I'm gonna go to the 1-minute chart. You switch, you go to the 1-minute chart, you look for a crossover going down on the moving averages on the 1-minute chart. Here we see a crossover that happens right here. We take the trade and we wait for 3 candles. 1, 2, 3, and we close. If you're feeling like a hero, you keep holding your trade, and it would have went down and you would have made roughly 700 pips. But with this strategy, we just hold for 3 candles and then we close our profits. This is the safest way that we can trade. And in a situation where the market reverses and goes against us, knowing that we are trading 3 candles, we will close with minimal risk without us blowing our whole account. So this would have been a winning trade and would have caught roughly 100 pips. on Nasdaq. Bear in mind, as I said in a very, very early lecture, I said that scalping on Nasdaq has the same type of effect as day trading on Forex pairs. So this scalp here would have been a successful scalp and would have made 100 pips and we'd be in profits. Okay, so we've done the buy and the sell setup on Nasdaq. Now we have to move to US30. Here on US30, we start with the sell trade. This is the sell trade here. These boxes, I just randomly put them in there so I can actually see what I'm referring to. So US30, we come into the market 5 minutes before the peak time, which is on this vertical line, and we see that on the RSI on the 5-minute time frame it's overbought. We switch to the 1-minute time frame and we wait for a crossover of the moving averages. A lot of times it happens where the market goes down, price crosses both moving averages, but then it goes back up. So the thing that saves us and helps us get the perfect entry points is the moving average, because it minimizes a lot of it minimizes the risk that we take and the losses, because it can still cope and filter out all of the fake breakouts. So as soon as there's a crossover here, as we can see on the moving average, after we come into the market 5 minutes before time, whatever happened in the past, we ignore it. But here we're looking for a sell trade now, and a crossover of the 5 into the 15. So here there's a crossover right here. We enter this trade from this candle and we hold for 3 candles, and then we make 418 pips in 3 minutes, and then we close the trade and we're done for this trading session. So this was the sell trade. Now it's time to move to the buy trade. So here's the buy trade here, right here. We enter the market 5 minutes before, as you can see here, and then we look for overbought and oversold. Here it was oversold. So now that we see that it's oversold on the 5-minute charts, we have to switch to the 1-minute charts. And then as you can see, this was a fake breakout. This would have enticed a lot of traders to put in buy orders, but it moved back down. And as you can see here, the moving average actually filtered out this fake breakout, and only when it crossed over did we actually enter a buy trade after the crossover. And we entered here and we held for 3 candles and we made roughly 300 pips. And this is a successful trade. If we're feeling like heroes, if we're feeling like heroes, we hold and we put up trailing stops, and it cancels us out somewhere here. Trading stops, once you actually master the strategy, are going to be very powerful, because in a situation like this where you risk not so much and you have a trailing stop, by the time it takes you out, you have probably doubled your account, because this is Nasdaq and pips come really, really quick and fast. So this is the buy trade. In total, this is what I wanted to show you. This is how you combine the two concepts into a powerful strategy. I'll just say it one more time. Number 1, you go onto the 5-minute chart 5 minutes before the peak time. Number 2, you look into the RSI. And look for overbought levels or oversold levels on the 5-minute chart. Number 3, then after that you move into the 1-minute chart and you look for a crossover of the MAs, and you execute your trade after the crossing happens. Not as it happens, but after the formation of the candle and it closes and it shows that there's a crossover, and then you hold for 3 candles. This is the strategy. This is how you combine it, and I don't think there's anything else that I've missed out that I haven't said. So yeah, check you out in the next video.